Welcome back for another Solana price prediction analysis, which at the time of this recording continues to hold below the 20-day MA here on the 4-hour chart, which is now acting as resistance for us to continue gearing up. We have also continued to hold within this price channel, where you can see that we have been trading within this ascending channel, which has now given us more than 3 touch points. And there are high chances that in the next coming hours we are going to see a breakout out of this channel, either to the upper side or maybe to the lower side. And basing my analysis on those two scenarios, there are chances that we might gain some buying momentum here on the Solana chart and continue gearing up and see a breakout out of the channel to the upper side with a retest of the upper side of the channel. And in case such a movement plays out, then we can easily see Solana get above the $21.42 mark, where we have our next key area of resistance. But in case we continue holding below the 20-day MA here on the 4-hour chart, which is resistance, then there are chances that we can see further pullback to the lower side of the channel, where we can either find support and get another bounce back. But in case we don't get that bounce back to the upper side, and maybe at some point Solana breaks out of the channel to the lower side with a retest, there are high chances that we can see further breakdown in a move that can give us a reset of the lows that we made on the 11th of September, and that is at around the $17.39 mark. That is another possibility that we need to have in mind here on the Solana chart. And zooming out on the charts to give you my Elliot wave analysis, where I still believe that whatever we are seeing is a corrective structure in the formation of this wave 2, and all this is playing out after we peaked in the formation of that larger Elliot wave count 1, and that was after seeing the lows on the 10th of June at around the $12.93 mark, where we saw that impulsive move to the upper side. And then we started our breakdown move in this wave 2. And the target areas for the second wave I have highlighted on the charts using this blue target area, an area that I came up with using the Fibonacci's, connecting the Fibonacci's from the low of the first wave to the high of that wave 1, giving me a minimum retracement area between the Fib level 0.5 and the Fib level 0.78. And that is between the $22.59 mark and the $17.05 mark. And as a result of those areas on the Fibonacci's, we need to continue holding above the $17 mark for us to still consider that whatever we have on the charts is a breakdown move in the formation of this wave 2. And in case by any chance Solana loses the Fib level 0.78, then the next key area of support is the Fib level 0.88 at around the $15.23 mark, and a break of the Fib level 0.88, then that will be suggesting a more bearish scenario, where we can see a reset of the lows that we made on the 10th of June at around the $12.93 mark. That is the worst case scenario that we need to have in mind. But as long as we continue holding within the blue target area and also above the Fib level 0.78, there are high chances that Solana can give us another push to the upper side in the formation of that wave 3, where we can easily see a break above the $32.23 mark in the next coming days. So those are the two possible scenarios that I have in mind here on the Solana chart. Taking a look at the indicators on the RSI, we are trading at around the 56 mark, fully supporting higher prices. On the MACD, we have been able to print a bearish cross, which is still suggesting lower prices. So let's be patient and see how that plays out, and I will be keeping you up to date.